Hi, this is Dave Aquino with Microquant, and this is the free video for Wednesday, June 11th, 2014. Just want a quick review the results of my most recent big fish trade. Again, looking at a price line on the daily chart. We, from the swing low based on May 8th all the way to the swing high on May 29th, we moved up quite strongly in price line. Roughly, let's see, I'd say that was about $205, so roughly $200 move, looking for a retracement back to potentially to the 50-day EMA. Now, when I initially got into this trade, looking for a pullback, I thought that price line would bounce off the 8-period moving average. We actually found a weakness back here on June 5th, in which we closed below the 8-period moving average. At this point, I was able to go ahead and take a bearish position based on a 60-minute chart of a bearish call credit spread in price line, as well as catch a move in price line as a bearish divergence, so I was able to establish a directional position also, according to how we trade our big fish trades. So not only, and if you recall, the 5th is actually Thursday, so not only did I establish a bearish call credit spread that would expire the next day, but when those credits were about $1.70 per contract, which is $170 per contract, and those were quite profitable because, as you can see, we closed below the short strike in price line. Here you can see on this 5-minute chart where I got into the initial positions back on Thursday the 5th. Right in here, the bearish call credit spreads. Short strike is at 1260, and the the directional puts were also purchased here. So this whole time period we are falling in price line, and today we actually at the open came down and touched the 50-day moving average. Again, looking at the intraday chart, that was my initial price target because it coincided very strongly with the 38.2% retracement level. So came down to about the 1212 level and was able to get out of those contracts. Now, the result of this trade was roughly price action going from $27.70 directional puts, and we sold just above $40 a contract. Okay, so the results of this price line trade, roughly purchased the directional puts here for around $27.70 a piece. And when we sold them down here today, Thursday, right in the morning, that came out to roughly about $40.50 a contract. So roughly between Thursday and today, our directional puts increased approximately $12.50 a piece. Now, we had 20 contracts, so that's looking along the lines of $25,600 or so. And we also, if we include the bullish put bearish call credit spreads from last week, that adds an additional $6,800. So when we take that all together, our trade roughly made about $32,400 in this big fish trade, trading roughly 20 contracts directionally and about 40 contracts as a credit spread back on Thursday. So really good trade, really good, strong bounce here. At this point, I wouldn't get back in it, but you want to be careful with that because price line has a lot of bounce. Once it touched the 50-day EMA, it has the potential to go back up from here.